Joining me right now, Erin Sykes is with us, Chief Economist, Nest Seekers International. Thank you so much for being here.
Of course.
Today, we have a lot to discuss. Overall, transaction volumes, how are we doing with the trends of housing?
So transaction volumes across the board have been pulling back. In Florida, we've seen the greatest pullback in transaction volume alongside Texas. And that's partially because we saw so much of a run up early on in the pandemic, and we kind of pushed forward a lot of that demand. Prices have held relatively stable across the board despite geography. However, there's a lot of negotiability. So my advice is to really get an offer, put it in 10%, 15% under ask, because there is a strong probability that you're going to get that deal once things have been sitting on the market like they have been for 180 days.
Yeah, it's interesting because the problem originally was that there was so much demand, not enough supply. Then the home builders stepped in and they were trying to find new properties, and those were selling better and more frequently than existing home sales. Do we expect more of that? The home builders were also sort of trying to negotiate a little bit when it came to rates and things.
They have certain tricks up their sleeves that we don't have in the resale market, and one of those being mortgage buy downs. And of course, that has been the hot topic. Rates have gone up from 3% to 7%. Yeah. For a while, we were even over 7%, and that's really what caused those home builders to carry all of that demand. And they were offering incentives where they would buy down a point or two on your purchase. And of course, everybody likes to have something new rather than something that's been lived in. However, I think we've peaked there because we have to remember the geography and the location of these home builder developments is not ideal. And real estate is really about location, location, location.
Sure, without a doubt. And you said you don't really see below 6% coming anytime soon. Is that right?
Not in 2024. I think that we expected a lot more to happen in Q1 when we were having these discussions in late December, and we expected rate cuts to already happen. But we have pushed that back, and we have to remember that it's an election year, and I think that things are getting a little politicized, and we're going to see these cuts happen perhaps in August, when it's right before the election, kind of getting people pumped up. So I think that all of our anticipation for these dramatic 6 or 7 cuts over the course of the year, that was falsity. And we're lucky if we get down to 6.
And look, you said buyer's market, right? Is that where we stand? And that's why you should try and negotiate?
Absolutely. It's always difficult to be a contrarian. It's difficult to make a move when everybody else is sitting on their hands. People tend to move as a herd, right?
Right.
But that's exactly when you should make a move. And that's because we are seeing these prices, despite them not being cut on MLS or online, what's going into contract is far below ask. And we saw that in Palm Beach this month. In Palm Beach, it's 42% less year over year in terms of closed sale prices. And then in Miami, we're seeing 27%, fewer closings this month than we saw this time last year. So the transaction volume and the prices are both coming down.
And then I said to you, coupled with it's still a high price environment, you'll have high insurance, and you added the taxes. That's another part of it.
This is part of the conundrum with Florida. Florida is a tale of two cities. It is the 1% versus the middle class. And we don't have enough workforce housing right now in the hot areas like Naples and Palm Beach and Miami. And we also need to do a better job as agents of educating how taxes work in the state of Florida. You are reassessed every time you do a transaction at approximately 1.8%. So that's higher for the most part because our prices have run up 2, 3, 4x. That's higher than most people expected. And then, of course, with the insurance and the couple hurricanes we've had over the last few years, that has created a very difficult situation in Florida.
How are you feeling about the economy? Because so much of this is contingent upon, when we have a booming economy, housing can be a lot of fun. Then things slow down when you have recessions and things. Where do you think we stand on the economy?
Well, I don't think that this is a housing bust like we saw in 2008 and 2009. Even though we've seen a pullback in transaction volume, I don't think people have been relatively responsible in terms of their purchasing of housing over the last few years. They took advantage of the 3 and 4% rates.
Sure.
Where we've seen more irresponsibility in the market is in terms of credit card debt national debt, that type of thing. So I think that if we see a fallout economically, it's not going to be driven by housing.
And then commercial real estate, I don't want to leave that out.
Yeah, commercial real estate is a big question mark, and a lot of people have been talking about conversions, particularly here in Manhattan, where we see a lot of vacant space. Now, conversions are much more difficult than it sounds. You say, oh, we already have this building, we're just going to make it into condos, easy breezy. That's not how they were designed. It's a whole different layout in terms of plumbing and HVAC and elevators and everything else. So what we need to do in order to make those conversions work is get the local municipalities on board. And we saw that right after 9/11 in terms of the tax abatements that we got for people moving down here to lower Manhattan. So we need these cities and towns to be on board.
Yeah. And then I always think about the home improvement stores, Home Depot and Lowe's. I think about the home builders, Toll, D.R. Horton, etc., right, Hovnanian. You even have Sherwin-Williams, right? We could put that into what goes on with housing, et cetera, et cetera. I mean, when you think about these types of stocks, I know you're not a stock picker, but themes of any sort when it goes to these names?
Yeah, I think home builders, we see continued demand for new product. I think that their prices are going to have to pull back because basically they were posturing prices because they had these rate buy downs. I think they're going to have to get more competitive in terms of their list price in order to compete with resale, in order to keep these, very aggressive targets for their stocks. In terms of Sherwin-Williams and Home Depot and Lowe's, people are going to stay in their homes longer because they have this rate lock-in effect. That leads to them doing more home improvement projects, so I expect them to do well.
Yeah, that rate lock-in, I mean, people don't want to give it up, and then they don't want to sell it because then when they have to get a mortgage for the next thing, it's more expensive. Thank you so much, Erin Sykes of Nest Seekers International. Thank you so much for being with us, Chief Economist there.